Are you staring at endless online mortgage calculators, wondering if you even qualify for a home loan, let alone a good one? You're not alone. The dream of homeownership can quickly turn into a nightmare of confusing jargon and seemingly impossible requirements. Especially when you hear words like debt-to-income ratio, credit score, and loan-to-value. It's enough to make anyone want to throw in the towel and just rent forever. But what if I told you there's a way to navigate this maze with a bit more clarity? Today, we're diving deep into the eligibility criteria for a SoFi home loan, breaking down the complexities and giving you the tools to understand if you're a good fit. So, why SoFi? They've made a name for themselves by offering a streamlined, tech-forward approach to personal finance, and their home loans are no exception. But that doesn't mean they don't have standards. Like any reputable lender, they need to ensure you're a responsible borrower. Let's start with the big one, credit score. Credit score, your financial footprint. Your credit score is essentially a snapshot of your financial history. It tells lenders how reliable you are at paying back debt. SoFi, like most lenders, looks for a solid credit score. While they don't publicly disclose a hard minimum, generally, a score of 620 or higher is considered a good starting point for conventional loans. However, to get the best rates and terms, you'll likely need a score in the mid-700s or higher. Now, it's crucial to understand that your credit score isn't just one number. It's a combination of factors, including your payment history, credit utilization, length of credit history, new credit, and credit mix. If you're unsure where you stand, there are plenty of free resources available to check your credit score. Knowing your score is the first step in understanding your eligibility. Debt-to-income ratio, DTI, the balancing act. Next up, we have the debt-to-income ratio, or DTI. This is a crucial metric that lenders use to assess your ability to manage your monthly debt payments. It's calculated by dividing your total monthly debt payments by your gross monthly income. SoFi, like other lenders, wants to see a healthy DTI. Ideally, your DTI should be below 43%, but some lenders may approve you with a higher DTI, especially if you have a strong credit score and other compensating factors. SoFi's specific DTI requirements can vary depending on the loan product and other factors, but aiming for a lower DTI is always beneficial. To calculate your DTI, add up all your monthly debt payments, including credit card payments, student loans, car loans, and any other recurring debts. Then, divide that total by your gross monthly income before taxes. This calculation will give you a percentage that represents your DTI. Loan-to-value ratio, LTV, the down payment factor. The loan-to-value ratio, or LTV, is another key factor in determining your eligibility. It's the ratio of your loan amount to the appraised value of the property. A lower LTV means you're borrowing less relative to the value of the home, which reduces the lender's risk. SoFi offers various loan products with different LTV requirements. For example, some conventional loans may require a down payment of as little as 3%, while others may require 20% or more. A larger down payment can help you secure a lower interest rate and avoid private mortgage insurance, PMI. PMI is an additional monthly fee that lenders charge when your down payment is less than 20%. It protects the lender if you default on the loan. So, if you can afford it, putting down a larger down payment can save you money in the long run. Income and employment history, demonstrating stability. Lenders need to see that you have a stable and reliable income to ensure you can make your monthly mortgage payments. SoFi will typically require you to provide documentation of your income, such as pay stubs, W-2s, and tax returns. They'll also look at your employment history. A stable employment history demonstrates that you have a consistent source of income. If you're self-employed, you'll likely need to provide more extensive documentation, such as profit and loss statements and tax returns, to verify your income. SoFi may also consider other sources of income, such as rental income or investment income. However, they'll need to see that this income is stable and reliable. Documentation, preparing for the process. Speaking of documentation, getting your paperwork in order is crucial for a smooth loan application process. SoFi will likely require you to provide various documents, including proof of income, pay stubs, W-2s, tax returns, bank statements to verify your assets and savings. Credit report. SoFi will pull your credit report, but it's helpful to have your own copy. Identification, driver's license or passport. Property information, sales contract, appraisal report. Having these documents readily available can help speed up the loan application process and prevent delays. Property type and location, meeting specific criteria. SoFi offers home loans for various property types, including single-family homes, condos, and townhouses. However, they may have specific requirements for certain property types or locations. For example, they may have restrictions on loans for manufactured homes or properties in certain rural areas. It's essential to check with SoFi to ensure your property meets their eligibility criteria. Also, consider the location of your property. Some areas have higher property taxes or insurance rates, which can affect your affordability. SoFi's specific loan products, tailoring to your needs. SoFi offers various home loan products, including conventional loans, jumbo loans, and refinance options. Each product has its own eligibility criteria and requirements. For example, jumbo loans, which are for loan amounts exceeding the conforming loan limits, typically require higher credit scores and lower DTIs. SoFi also offers refinance options, which allow you to replace your existing mortgage with a new one, potentially with a lower interest rate or better terms. It's essential to research SoFi's specific loan products and understand their requirements to determine which one is right for you. Remember, homeownership is a significant financial commitment. Take the time to research your options, understand the eligibility criteria, and choose a lender that you trust. SoFi is a good option for many, but always shop around to compare rates and terms. With that said, thanks for watching, and until next time.